$500, it could be one thing. It could be 20 things. Like, it's so difficult for you to go back that far. So ideally, what your bookkeeper should be doing is they should be sending you reports on a weekly or a monthly basis that say, here's some things I got questions on. They're going to know some things. Like, when it comes up with Google ads, they know what a Google ad is. Like, they can put that in advertising. There are some things that they don't need a question, but there are others. Amazon. When Amazon comes up, it could be anything. If they don't have access to see your checks, then if a check comes up, they need to ask you about that. There's always going to be things that they're going to ask you about, and you need to be willing to communicate with them. And the sooner you can do that, the better your books are going to look, the easier it's going to be for you because you're going to remember.
What's up, guys? Sam Taggart here with the DDD podcast, and I am here with Mr. Michael from Down Under. How do you say it? I don't even know how to say your last name.
It's Scicluna.
Scicluna.
If you hear it before you read it, it's way easier.
I try to read it, and I'm like, I don't even know. But me and Michael have worked together for years now, so I literally am on a call with him every week. And, you know, we've built a really good relationship, not only playing basketball, and he's like a 6. He's scrappy enough, but I love it. But just got done speaking at Door to Door Con. Was that a fun event?
Yeah, it was killer. It was probably one of the best run events that I've been to in a while. And I think that I could tell the attendees got a lot out of it, and we as a vendor got tons out of it. And yeah, it was a really good opportunity for us to go and be there.
It's cool. You know, he works with High Country Finance, and these guys are tax, bookkeeping, and kind of just like virtual CFO-ish in a sense, right? Like, it's not, I think it's more targeted on the tax and bookkeeping, but they do a lot of like, let us help you, because if you don't understand finance, then we can't take care of your books. And we're going to dive into that. So if you're a rep that struggles with their money, like I remember I was talking to Luke, and I'm just going to say it how it is. Okay, so he's like, dude, I make tons of money, and I don't know where that money is. You know what I mean? Like he was a double Golden Door winner this year. Obviously has some nice commission checks, but you could tell like his struggle was looking at his bank account. Like a lot of people get this fear of, I don't want to look, and as long as I make more, I'm happier, and as long as there's money there, I'm good. And I think over time I've had to change that, especially moving as an entrepreneur in multiple companies. You know, you have to start being like, wait a minute, I actually need to know if this made sense or made money or not. So like, I bet you in 3 days, I'll know. I mean, this is Monday, day after Door to Door Con. Whenever this comes out, great. But like, I need to know by Friday, where do we land? Like, let's run all the numbers and say, what was ticket sales, vendor sales, resales? What was our costs from booths to print to all the things? I want to know, do we make money? Like, was the event profitable? By how much? You know, ad spend, all the things. And a lot of, like the first 4 years, I had no idea. Like I was like, well, there's money maybe. And I learned, I was like, oh shoot, I made and lost money on that. And I didn't even know. And so we're going to dive into not just personal, but a lot of business strategy on do's and don'ts of finance, understanding your back end as an entrepreneur, what to look for. And so if you're watching and that's interesting to you, stay tuned. Here we go. So I guess, how'd you get your start into finance? Like that, like, was that always an interest of yours? Like when you were a kid, you were like putting beans aside and doing math equations and stuff?
No, I actually, I took an accounting class in grade 11, went for the first week and said, this is crap, and didn't go back. So I did not think I was going to get into accounting. I actually studied engineering, mechanical engineering. And once I really enjoyed studying it. Tons of math, like just all day, every day, we were just doing really complex math equations. And once I finally got to the end and I started working as an engineer, I realized that I was basically like a glorified contractor. Like I wasn't actually doing the heavy thinking that I was expecting I would be doing. And so I took a step back and said, all right, well, I'm not going to enjoy this for the rest of my life, so I got to do something that's going to challenge me. And so I started looking around, asking people that I knew and respected, and they kind of guided me towards finance. So I took a few more courses in accounting and business management, and then landed at a startup, did their accounting for a while, and eventually they were like, hey, we need someone to be our CFO. Do you want to do it? And I was like, hell yeah, I'll take that. So I jumped on that and just kind of grew with the company. The company got to 15 million in a few years and got to a point where I wanted to learn more. I wanted to expand more, not just be in the one industry, one company. So I went and started working with Brady at High Country Finance. And obviously we work with a lot of different industries. Funnily enough, now I'm pigeonholed again into the door-to-door space, like solar, roofing, telecom, all that kind of stuff. We do have other companies, but obviously in this space, everyone knows everyone. And so we just get referred. And so we keep picking up clients in the same space. But it's made me an expert in this space, which is great. And that's kind of how my journey's gone.
It's cool. So the first question is like a lot of people ask, and one of your talk was about like when and why would I ever get a CFO? And I get asked this a lot, even to the point where our expert circle mastermind, we went and interviewed a CFO, and I remember he's like, yeah, we were at 100 million and still didn't have a CFO. I was like, so it was shocking, and I was like, wait, what? And so I guess kind of talk to us about the concept of like, what is a CFO and why would I ever need one and when, kind of thing.
Yeah, it's a really good question, and I think that not enough people ask that question because they hear CFO and they're like, I've got a CEO, I've got a COO, CFO's got to come next, right? And you need those roles eventually, but a CFO essentially is the financial mastermind of your company. Your accountant is going to take everything from today and back in time, put it all together, organize it, and then tell you, this is what has happened. A CFO is going to take that information, analyze it, and then tell you, here's what we can expect from the future. The CFO is also the person that you're going to bounce financial ideas off. Like, we want to invest in this project. Is this going to actually be worth it? Is it going to be profitable? Even if it's not going to be profitable in the near future, could it be profitable in the future, like further down the line, 5 years, 10 years? And a CFO is going to help you gauge those kind of things. So a lot of CFOs can't actually be very helpful to you in the first year or two because they don't actually have much to go off.
Yeah.
They're really just grasping in the dark. And even though all CFO work is going to be a lot of conjecture and looking in a crystal ball for you, a CFO with a bit more experience and with a bit more data behind them can actually do a lot more for you than a CFO at 1 year's worth of business.
So I think a lot of people, when they hire a bookkeeper, they think they're going to wave a magic wand and all of a sudden their books are going to look clean. And, when I say clean books, I mean, think of it as like business intelligence. You have, what are these numbers telling me, right? Like that's what bookkeeping is. It's like a lot of people are like, there's bookkeeping for I need to pay taxes and know what I pay taxes on. But then there's bookkeeping that's like, what did these numbers tell me? And I think anybody that can't open up their books, whether that's on QuickBooks, whether that's on a spreadsheet, like whatever you're using, and quickly see what's going on as it's updated, you're going to run a business blind. And I've been through 4 different bookkeepers, and I've learned what not to do. And now I can tell you what to do. But about a year or two ago, maybe 2 years ago, I definitely could not tell you what to do because I'm sitting there frustrated. I even hired my own internal bookkeeping guy and still did not get this answered. So I'm going to tell you my journey and not steal from Mike, but I think it runs in parallel. You hire a bookkeeper and you're like, they get you access to all your accounts and there you go. You think, put it all together. But I didn't get a call for a year of like, hey, what was this random Target transaction for $497, right? Like, and I'm just thinking like, well, yeah, they've read my brain. They know it's for an event, food for an event. Or that Target transaction could have been me shopping for me for a birthday present. Like, you know what I mean? Like, It's Target. You can buy whatever you want. So what happens is that Target expense to a bookkeeper that's not reading your brain or shopping with you, what do?
And
what do your people do? I'm curious. Like,
and it'll depend on the bookkeeper. Some bookkeepers will just straight up guess. And that can get you in trouble because in your circumstance, they could say, well, that was an owner's expense, so they'll make it non-taxable. But you actually then spent it on something that should be taxable, and so you're missing out on potential tax savings. Or they throw it under like an office expense, and then you get audited, and the auditor's like, well, why the heck do you have this here? And you're like, I don't even know what that is. Like, it's 5 years ago now. You
Yeah.
have no idea. So
your bookkeeper just automatically audited it to office expense and their natural default. And all of a sudden you had $175,000 of office expenses. Like, oh, okay. Like, what is it? That's the junk drawer is what we could call it.
yeah, exactly. and to your point, they come to you a year later. Like, how are you supposed to know what you were at Target for a year ago?
Yeah.
$500, it could be one thing. It could be 20 things. Like, it's so difficult for you to go back that far. So ideally, what your bookkeeper should be doing is they should be sending you reports on a weekly or a monthly basis that say, here's some things I got questions on. They're going to know some things. Like, when it comes up with Google ads, they know what a Google ad is. Like, they can put that in advertising. There are some things that they don't need a question, but there are others. Amazon. When Amazon comes up, it could be anything. If they don't have access to see your checks, then if a check comes up, they need to ask you about that. There's always going to be things that they're going to ask you about, and you need to be willing to communicate with them. And the sooner you can do that, the better your books are going to look, the easier it's going to be for you because you're going to remember. So I think it's really important to have that two-way relationship and not just expect that they're going to read your mind, like you said. It's really easy to just think, well, I know what it is. Why don't they know? Like.
And guys, I'm telling you. So I thought, hire a bookkeeper, magic sauce, they'll make my books. And I go to do my taxes. And then I was like, whoa. And they even told me I made X amount of dollars when I'm like, there's no way. I went through my bank statements and I just put how much money had been deposited in my bank. I was like, we're off by $400,000. I'm like, how are you telling me I made this when I'm only showing this was deposited in my actual bank account? Well, $400,000 mistake on tax, that's an extra, let's call it $150,000 in taxes. And I'm over here like, whoa. And I then had to go redo, so I've had some nightmare stories is what I'm trying to get at. Hire an internal guy. He's never really thinking through it. And so it wasn't until I brought on Mike and team and I was paying $400 a month, I think, for a bookkeeper, maybe $300 a month. I have a lot of accounts. And they said, yeah, it's going to be a couple grand. I mean, several thousands of dollars. And because I was to the point where I was like, do I just have to get a CFO, right? And even then I hired a fractional CFO for 3 months to come in as a consultant and still didn't get it. Like he still was like, we're going to do this and this and this. So I'm saying this because one, I like Mike and I trust him and a lot of people should use these guys. But two, I had to then say, wait a minute, I'm a smart dude. I could learn accounting. If I'm a business owner, everybody that is in business, that is running entrepreneurs, what do they tell you to major in college?
Accounting.
They say, go to be accounting major. You're never going to use your degree, but you need some basic understanding of accounting. And I've heard that over and over and over again. And I'm like, no wonder they want to tell you that. Now that I'm at this point, right? They're like, because you need to know from an elementary level of accounting, accounts receivable, chart of accounts, balance statements, income statements, your chart of account, like all of that, you need to understand why are we trying to get to what we're getting. So speak to us a little bit of basic 101 accounting, what every entrepreneur should probably know.
Yep. So I'm sure that everyone listening to this is going to look and say, I know what my P&L is. And that's a good start, obviously, but a P&L is really simple. It's money in and money out. And that's a cash basis P&L. But what you don't realize is that there are some things that you may be spending money on that aren't going to show up on your P&L. So when I first look at a company, I don't even look at the P&L. The first thing I do is look at the balance sheet. Because if the balance sheet is incorrect, then the P&L is incorrect. And that's where you probably ran into that issue initially, is that you looked at a P&L and you said, okay, here's my net income, but you knew the net income was wrong. And that's because things were being posted on the balance sheet that should have been posted on the P&L or vice versa, right?
And this is all going through divorce, so I'm trying to freaking find a nut of like, what do I owe the ex, right? And like, I fathom that. So I'm paying child support based on false numbers that I was guessing on. And I'm over here like, this is not right.
Yeah.
I'm telling you, it can cost you a lot of money saying this from experience. Keep going.
And if you don't mind me saying, for Sam's experience, when we came in, it took us 6 months.
6 months.
To get everything cleaned up. So get it done right from the beginning is number one. Get it done right from the beginning. You'll save yourself a ton of headache. And I know that for you, that 6 months was frustrating because you still didn't know if we were doing a good job or not.
Yeah, I'm like, come on, guys, you guys are gonna like this still doesn't look right. It still doesn't look right. And I was hounding them. I was like, guys, you told me it would take me like 2 months, and then they're like, no, this is so bad.
So it was really frustrating, and I could tell Sam was getting frustrated, but by the time we got it done, I mean, it's night and day difference now.
Yeah.
So there's some things that you need to know to be able to tell whether or not your bookkeeper's doing a good job. You need to know what a balance sheet is supposed to look like. So I'm going to go through some elements of a balance sheet that you can very easily look at, and you should be able to determine whether or not it's even close to being right. So the very first thing at the top of the balance sheet is going to be your bank accounts. It's often called cash and cash equivalents. When you look at the bank accounts, two things you're going to want to look for. Number one, is there any negatives there? If there's a negative, huge red flag. That means that there's obviously some pretty large problems there. Reconciliations haven't been done. Transfers have been made in the books, not in your actual bank account, but in the books, things have been done that are just incorrect, and your bookkeepers haven't caught it. If your bookkeepers aren't catching something like that, where you've got these large negative amounts, now if it's like negative $20, then maybe you overdrafted. So go check your bank account, right? But if it's negative 20,000, that's a huge problem. It should never get to that point. So that's the first thing to look at. Negatives, big problem. The second thing to look at is this close to what you know is in your bank account? So if you know that you've got 100 grand in the bank account, but your balance sheet says you've got 2 million in the bank, again, huge problem. So when I look at that, I can usually tell pretty quickly what the problem actually was that caused that. You don't need to know what the problem is. You just need to know there's a problem.
Yes.
If you know there's a problem, then you can call your bookkeeper and you can say, look, here's a problem. Can you fix it? Maybe they missed it. Maybe they're swamped and they got other things that they just didn't see it. That's okay. It happens. Everyone knows sometimes you miss things. But if you call them and you say, this looks like a problem, and 2-3 weeks go by and they still can't fix it, or you don't get that communication, then maybe you need to start looking for another bookkeeper. The second thing you're going to see under there is your accounts receivable. Now, if you're on a cash basis, you may not see accounts receivable at all. Using QuickBooks Online, you can toggle between doing cash and accrual. And so you want to check whether or not you're actually using accrual. If you are, accounts receivable is going to be there. And so you want to have a look if that looks correct. If it says that you have, let's say, 10 million in outstanding receivables and your total revenue for the year is 15 million, what that's telling you is that your revenue is, most of it is made up of stuff that is sold but not collected on. That's a huge, huge problem, if that's even true. So I've seen a lot of clients where they come to us, we have a look at that, and they're saying, it says that I made 50 million, but I have no idea how it says that because there's no way that we've sold that much. And we have a look at it, and it's because their accounts receivable is showing 10 million. So what's actually happened is the bookkeepers have gone in, they've put the invoice in, then the money's come into their bank account, and then they've marked that money coming in as revenue. So now you've got an invoice as revenue and cash as a revenue twice. They're double entering all of your revenue. Yeah. So you can run into lots of problems that way. Or maybe there's invoices that are entered and then the job's canceled and they don't cancel the invoice, they just leave it there.
So this happened to a buddy of mine just last month. He goes to kind of clean up his books at the end of the year, and he found $700,000 he was thinking he had made that he had not made because they were double showing. Guys, when you think you make an extra $700,000 and all of a sudden at the end of the year, you're like, just kidding, we don't really have that. That's a painful thing. You're like, wait, what? And you're making judgment calls like, next year we're going to buy more inventory or buy a building or whatever with that. Like, I'm telling you, there's horror story after horror story with the clients that I've seen. And I'm like, I don't care how good your bookkeeper is, you need a checks and balance system yourself. Like, you in charge of your money to know if these things are right.
Yep. And like I said, you don't need to know exact. You just need to know if it's like close.
Yeah.
And this is one thing, when we meet with Sam every week, we pull up the reports and Sam will say, that doesn't look right, let's dive into it. Sometimes when we dive into it, he goes, oh, it's because this needs to be moved here. And other times we look at it and he goes, holy crap, I didn't realize we spent that much, or that we made that much, or that we didn't make that much. And it doesn't actually matter what the outcome is. What matters is that you're able to say, that doesn't look right, let's make sure that it's right.
Yeah.
And that makes a huge difference overall, because if we were to get to the end of the year and we had lots of little that doesn't look rights that we just never talked about, that can turn into a $700,000 revenue that's not actually there.
Yeah.
Which can cause big problems for the tax man. If he didn't catch that, he may have ended up paying taxes on $700,000 that didn't actually happen.
So another thing I want to add to this from an accounting advice that really was big and it kind of clicked for me. Whether you're running a pest control or solar or roofing or just any other business, my business is very different. And so what most accountants do is they pull out QuickBooks right out of the box and they think that's catered to your business. If a bookkeeper doesn't sit down with you and say, tell me about what kind of normal expenses you keep on. Like I have random expenses on like event swag. That doesn't just show up on a chart of accounts out of the box. Like it's not just on there. So you either have to go create the line that says event swag as an expense, or you create the line like travel. Well, all my travel is not the same. Some's internal events, some's external, some's to a consulting, some's for coaching, and some's for fun. So I need to categorize, well, what kind of travel is this, right? So then I know what am I doing? So really categorizing they call it a chart of accounts is going to be a big one. But the other thing that I didn't realize I could do is classes, and the other thing is projects. And so classes would be almost like I have my internal P&Ls for different products in my company. And I think a lot of people don't realize like a random bookkeeper is getting 50 grand a year, 30 grand a year to be a bookkeeper. They're not an entrepreneur thinking of like, oh, how nice would it be if I could run a thing and see how much did I make in masterminds, how much did I make in internal events, how much did I make in, online training. Even though it's all one company, I have different revenue streams, right? So you can create classes that would then classify those expenses and the incomes to have micro P&Ls within your QuickBooks. The other thing is projects. Well, if I'm running 20 events a year, for example, and I put internal events as a P&L, I don't know how much I made technically on that one event. A lot of people would use projects. So I want to know, what did I make on that one event, and what did I lose on that one event? What was my income and expenses there? So those, I'm just giving you my quick tips on things that I wish I would have known about accounting, but had to learn some hard way and actually start learning it, So.
And a lot of those learning experience happened because you said, hey, I want to track this. How can we do that?
Yeah.
And so we came up with a plan to help you to track these things.
Well, think even like he said Google Ads. So my bookkeeper is automatically going to just put that in marketing. Well, yeah. But what if I have 3 Google Ads accounts and one is marketing towards solar, one's marketing towards roofing, and one's marketing towards something else? Mm-hmm. Well, wouldn't you want to classify the ad spend we spent on solar to know my ROI and then where those leads were and what that converted was versus the ad spend on roofing? You know what I mean? Like if you're subdividing ad spend and it's not all one product, one revenue stream, you might want to think about that. See what I'm saying? Or one's inside sales, one's outside sales, one's for recruiting. You know what I mean? There's differences there. So I want to know what is the return on that?
Yep. And I'm going to touch on this so many times today. We've been able to put together your reports in a way that gives you that clarity that you're talking about because of how you were willing to work with us. I've had clients that have come to me with the exact same request. They say, I want to know how profitable each job is. I want to know how profitable this revenue stream is. I want to, they want all these bits of data. And I'm like, yeah, great, we can do that. Here's what we need from you. And they're not willing to work with us to get that information. Because if you want me to track as your bookkeeper a certain project, you've got to think, how's Mike and his team going to know what goes towards that project? And there comes a point where you could say, all right, well, I need you to get on a call with my operations person every day and just ask them questions about every single expense. I can do that, but I'm going to charge you for it. Or you could say, we're going to implement a software like Divvy plug for Divvy here. Yeah. Implement a software like Divvy where your employees and your reps, when they go out and they spend money, they automatically say, I'm going to put this money into this project and this class. There are things that you can do to streamline that to make sure that it's not sucking up all of your time, but it's still able to give you that clarity that you're looking for. So again, just remember that you've got to be willing to put in the systems, you've got to be willing to put in the work to actually make it happen.
And it took more pain and loss and miscalculations to where I finally was like, okay, Let's put meaningful time into this. And once the system's built, like we just added the Elite, right? We launched that this year. It's another mastermind. So now I need to go to Mike, and he's like, well, what's all this revenue for? Like, it's new classification. It's a new chart. It's a new line item that would go under this, right? And if I don't call him and tell him that, he's going to be like, I'm just going to put it into the, buckets, right? Like,
Yeah.
You know what I mean? So I have to be able to communicate back and forth. And so what I've done is, I'm going to give you just my 2 cents. And guys, this is just good advice. I got Divvy one time 3 years ago, didn't understand the power of it. So we canceled it. I was like, I'm not getting the points and the perks and the other stuff like I do on my Capital One card. But then I switched back because I was like, it's more important for me just to know where the frick the money's going. And it forces, every time somebody swipes the card, it says, what project is this? What class is this? What chart is this? So then I had trainings with anybody that has a credit card and is going to spend money in my business. You have to put the class, you have to put the project, because I didn't probably once spend money for Diddy Decon on my Divvy. Now that I think about it, but I have my team buying trophies, buying confetti, buying freaking, who knows what. And so they need to have been trained, classified, Diddy Decon expense. But we have Closer School Live coming up right now, where we've already spent money on Closer School Live. That could have easily been misread to think it was door-to-door kind of expense.
Exactly, yeah.
So then number 2, my billing, and she just does billing and expenses. Like I have an internal girl that I'm like, can I just make this her job to make sure that each week Divvy, from every Divvy card or every credit card you guys have, everything is classified. Like she is in charge of calling up employees, being like, hey, you didn't mark what this was for. So I'm doing a lot of the heavy lifting. So by the time it even hits to the bookkeeper, there's maybe 30 expenses for the whole week that they're like, hey, we don't know this because it was a check, or we don't know this because somebody forgot. And we're like, oh, okay, cool. So that's our process, if that helps anybody.
Yep. And that actually, I want to jump to another point there with what you said with your girl that is your billing and expense expert. That's probably one of the first hires that you probably want to make internally. Because if you can get someone internally that just makes sure that the information is getting to your bookkeeper correctly, then your bookkeeper doesn't have to understand your business all that well. I mean, you do want them to understand your business to an extent, like you said, to make sure that they're creating the right chart of accounts and all that kind of stuff. Your bookkeeper, and I keep saying bookkeeper, really you need an accountant that work like an outsourced accounting firm. So you need someone that understands accounting. Internally, the person that you hired, they don't really need to know accounting. No. All they need to know is, here's a bill, what's this bill for? Understand Divvy if you're using Divvy or whatever system you're using. They just need to understand that system. But and really she's just chasing and making sure that things are just logged correctly.
Yes.
That's a really, really good hire to make. And then you hand it over to the people that really know how to do accounting, and they just make sure that the accounting is correct, rather than them trying to chase your people.
Yeah, because a bookkeeper calling a business owner, that business owner is probably giving her no time at all. Let's just be real. You're out selling, you're out running around, you're out meeting, your bookkeeper calls you, you're not like, oh, hey, let's talk for 45 minutes. They usually get sloughed off. The emails go unread, XYZ. And so I found I'm like, oh, I need a liaison. I need a whole team. Even when we have finance meetings, she's on it, Braden's on it, my COO, because I realize I am struggle having my head in the weeds. I'm on most finance calls, but not every one, because there's even times where I can't be on every week, right? So I have a team in place that's helping kind of liaison the communication between bookkeeper, CFO, and our business. So, and then what's nice is I've been able to go to Mike and ask questions like, okay, am my commissions too high or are my commissions too low? Or let's project I don't think I'm paying the right way. Commissions is a big one for me because I'm I don't know, how many people can I hire? Or when is a sales rep profitable? Because if you pay somebody W-2, you're what's my return on this? Or how many employees can I hire before my overhead gets to I start drowning myself? And Dave Meltzer talked about this at DDDCon. He's the thing that drowns you the most in any entrepreneurship is expenses and overhead. He's dude, employee costs can get so expensive. And if you're not forecasting and budgeting for income and growth, and you're not you're just like hiring to hire. Like I've had dead weight hires and I've had to let go. I'm like, they're just sucking money out of the account when it's like, okay, your numbers can kind of tell you what these ROIs are.
Yeah, and I in my experience, seeing a lot of different companies as they grow from the startup phase, hiring is the number one issue that you run into from a finance perspective, and so I'm just talking money. I'm not even talking like your internal culture or whatever. Like there's all sorts of issues there too. The three big mistakes people make. Number one is not hiring when they need to, and this one I really want to touch on and help you understand. If you're the kind of person that's very frugal, you want to show a high net income, that's great. But if you don't hire enough people, then the people you do have will leave you because they're overwhelmed, they're overworked. You've got to make sure that you hire at the right time. The second thing is hiring the wrong people. Sometimes I've seen companies just get bloated with people that just are not good at their job. They don't work very hard. And the problem with that too is then it kind of becomes a cancer. They encourage other people that are like, hey, this is a job you don't have to work very hard. So other people start doing that. And then the third thing is holding on to people mostly because you feel bad or you have a connection with them, basically. Like you've hired them and you've worked with them and you've tried so hard to coach them and you just feel this connection that they're almost like a friend, but they're just draining the company. And so when you make all of these incorrect decisions, especially the second two, what you don't realize is you think I'm paying this person, let's say $50,000 a year. So you're thinking, okay, this is costing me $50,000 a year. It's not costing you $50,000 a year. It's costing you way more than that. And you're probably thinking, oh, okay, I guess, the employer taxes. That's going to add 7% on top of that. Okay, yeah, that's something. It's not just that. It's your time. It's the rest of your team that's working with them. It's their time. It's your your software resources. If you've got an office building, it's those resources. There is so much of your company that it's actually very difficult to, in a startup, to track all of these things, but a lot of larger companies, they do. And what they've found is that whatever you pay someone, on average, you take their salary and you add about 50% to that. That's actually what they're costing your company on average. So if you're paying them $50,000, they're costing you 75. You've got to think, like, is that really worth it? So when you can find someone, and let's say instead of this $50,000 employee, you go out and you find someone for $70,000, but they're 3 times as productive, it's actually astronomically more valuable to you to find the right hire. Yeah. And I think too many people just think, well, I'm going to help them. I've made that mistake. I've held on to employees for far longer than I need to. There's a principle you may have heard of, hire fast, fire fast. I think that's really important. So don't get into analysis paralysis. If you need the people, hire the people. But have a strict plan in place to be able to determine, is this person doing what they need to do? And if they're not, you got to go find someone else.
Yeah, it's huge. This is good. What other, obviously you get to see, I guess this is an interesting question. You get to see a lot of solar, roofing, pest, alarm, whatever, window companies from a different lens. From the lens that you see it, from the numbers and the back end and watching people kind of interact differently with books and finance and how their relationship to money is very different. Some are spenders, some are savers, some are quiet, some are loud, some are organized, some are not. I guess what advice would you give the entrepreneur in our space kind of coming from your lens?
That's a really good question. First of all, every time I pick up a new client and they kind of hand over all their information, they're always kind of nervous because they're like, you're going to see everything about my life. You got to understand, I see everything about everyone's lives. It's an open book. And so I'm not going to judge you for it. There are very few people that will have worse books than what Sam did have. So you can just be sure that I've seen as bad as it can get. In general, and I'll speak to specific industries in a sec, but I think in general, the most important thing is for you to have a financial plan. So you guys have probably heard of Robert Kiyosaki, and you've probably also heard of Dave Ramsey. So I like to call this the finance strategy spectrum. So on one side, you've got Robert Kiyosaki, on the other side is Dave Ramsey. And I put them on either end because they're the extremes. Robert Kiyosaki basically says that debt is the best thing in the world that you could possibly use to your advantage. Dave Ramsey says that debt is of the devil, don't touch it. Now, you don't need to pick either or. What you do need to pick is where you want to put your financial risk. So you may be, like if Kiyosaki's over here and Dave Ramsey's here, you may be here. You may be further towards Kiyosaki, but you might still be like, I still want to at least have this in the bank and I don't want to have too much debt. Like, that's fine. Robert Kiyosaki is like, get as much debt as you possibly can. You may be over here where you like a little bit of debt, but you try to mitigate that as much as possible. It doesn't really matter where you are. What matters is that you have a plan and you stick to it. The biggest problem that I see is when people their money comes in and they go, I got money, and they spend it. They have no plan whatsoever. If you have no plan, then eventually you're going to hit a road bump. And that's when you're going to realize, oh crap, I've not planned for this. Robert Kiyosaki has hit road bumps all throughout his career. But he's learned enough that even though he hits those road bumps, he's able to overcome them, and he's still extremely wealthy. Like he's had companies go into bankruptcy. It doesn't matter to him. Like, obviously, you don't want any company to go into bankruptcy, but he has the plan in place. He knows what's going to happen. If this recession hits, like people have been talking about for 5 years now, it's not going to put him out of business because he's got a plan. But I can tell you right now that there are so many people that I've worked with that I know 100% they'll be out of business if a recession hits because they don't have a plan. They tell me they have a plan, but their plan is, we're going to grow, we're going to grow, we're going to grow. That's not a plan. When I talk about a plan, I mean a financial plan. So with that being said, I'm going to talk first about solar. The issue with solar is that all of your revenue is based on future installs, and you have to actually spend a lot up front to get those installs to happen. Whether you're a dealer and you outsource you have the EPC do all of the installs, or you have contractors do it, or you do it in-house, it doesn't really matter. You have to pay a lot up front to make the stuff happen. And roofing's not too different, but solar is much more front-end heavy while you're only getting paid on the very back end. There's not a lot of cash deals happening in solar. It's almost exclusively being financed. So what I see with a lot of these solar companies is they sell all of these deals and they see the sales that are happening and they say, oh, we sold 2 million in jobs this month. And that's great. First of all, you're going to have some of those cancel. Yeah. So you haven't really sold 2 million. I'd say that you should conservatively say that somewhere between 5 and 10% of that is going to cancel. I've seen higher. That's another problem to talk about, but let's just say conservatively between 5 and 10%. I have seen lower as well. There's some companies that have very low cancellation rates and you can definitely make that happen. But even though you're seeing that, you minus your, let's say 10%, so now you're at 1.8 million in revenue, that 1.8 million is not going to hit your bank account for a few months. You may get M1s, so maybe they'll pay out a small M1 amount. A lot of the EPCs are moving away from that now. But even though the EPCs are moving away from it, the reps still want that M1 payment.
Yeah, so you have to play bank.
You have to play bank, right? And so then what they do is they go, we'll go out and get a loan and we'll just pay them out from this loan. And that's great. You can do that if you have the right plan. But then they take out the loan and then the company just keeps growing. And the thing is,
funding more and more.
Yeah, if you keep selling more every month, let's say that you were to just be killing it, you're crushing it, you're doubling your sales every single month. That seems like a hugely awesome thing to happen, except if you're fronting money on every single time you sell, because it means you're constantly playing catch up and your debt's just going to increase. And the only time you're ever going to the only time you'll ever actually catch up is when you stop. And you don't know when or if that's ever going to happen. So yes, it's good to grow, but you need to taper that growth. You need to make sure that you have a plan for that growth. You need to make sure that you're building your compensation plans with your reps so that you can afford to pay them. Yeah. It doesn't make sense to say, guys, go out and sell like crazy, give them low red lines, so you're on a really razor thin margin, and now you're trying to front money because essentially you're paying your M1s with the M2s from 3 months ago. Yeah. So building that plan, forecasting that, as you grow, you're going to start to have overhead as well. You're going to have maybe an office, you're going to have installers, or you're going to have office staff. There's all these things that are going to come into play. It's not going to get easier. It's only going to get more complex.
Oh, I wish this is so good. And Devin Anderson gave a workshop on this. He's one of our mastermind members out of Denver. And he's like, everybody comes up to me thinking, oh, we're making so much money as a solar installer, right? And I'm going to be my own business owner. And I'm like, I don't think anybody tells them. It's like, who's coming up with the money when you're chasing your own debt? Well, if you're not going to get a loan, that comes from the owner. Like, it's like, oh, either take a paycheck this month or pay my reps. And most good people choose to pay the reps. Unfortunately, there's been some bad people, or just people, not even bad people. There's in a crappy scenario. They're like, I don't have money. I don't know where to get money.
Yeah.
And they choose to not pay the reps, right? And they choose to not fund. And we've seen that over and over again. And moving into this next 6 months, I foresee happening more and more. And, you know, as I see some of these solar companies getting pinched, especially the installers. And if the installer's sitting there going, I have to pay all my employees, keep my staff, or pay out these deals, you know, they're stuck between a rock and a hard place. And you know, a lot of people are like, it's unethical. And I'm like, no, it's not necessarily unethical. It's business. That business can go, what's unethical? Is it unethical that Brinks goes and files bankruptcy, doesn't have to pay the hundreds of millions of dollars, and goes and just keeps operating? You know what I mean? And they have to go to court and after this. And it's like, the sucky part is, like, that happens on a big scale and that happens on a little scale. But it's no fun being on the other side where you're like, I'm owed money.
I want to actually relate that to, because that conversation, I'm sure that if you're sitting there and you're just a single rep, you're thinking, well, this doesn't apply to me. I'm going to go tell the dealer that I sell for to change what they're doing. You know, I want to relate it to you as a rep. You get paid the same way. You don't get paid, even if you do get paid an M1, you're not getting paid the full M1. You're maybe getting paid $1,000 or something like that. If you're doing really well, you're getting $1,500 or $2,000, but a lot of reps aren't getting paid that M1. But even if you are, you make that sale, you know your commission's going to be $10,000 and they give you $1,000 up front. A lot of reps go, sick, I've got all this money, I'm going to go spend it. And then next week, you don't sell anything. And the week after that, you don't sell anything. The week after that, you don't sell anything. And then the job that you did sell gets delayed, and it gets delayed, and it gets delayed. And now all of a sudden, that $9,000 that you were banking on coming in, it's not going to come in a few weeks. Now it's going to come in a few months. I know this because I run payroll for some of these solar companies. These reps get really upset when things don't happen exactly when they think it's going to happen. And I know why. I've been there. I actually...
Because they spent all their money.
They spent all their money because they were expecting it to come in. I did some door-to-door sales when I was a teenager. And I remember that. You get that one massive paycheck. And you go, this is awesome. I'm killing it. I'm the best salesman in the world. And you go out and you spend it and you have all this fun. And then the next week you're like, I am the worst salesman in the world because I haven't sold a single thing, or I've sold very little. And like... 100%. You as a salesman, you're running a business.
Yeah.
And I don't care if you understand this or not, you need to. You need to get to the point where you realize that you are running a business, and if you ever want to be truly successful, you need to start treating your sales as a business. When you have a killer week, take a large portion of that and say, okay, this is much more than I normally get. I'm going to put this aside for a rainy day. Because that rainy day is going to happen on those weeks that you don't get that huge commission check.
And stop blaming the owners as if they did something wrong. It's like, no, blame yourself for not having rainy day funds.
Exactly.
Blame yourself for not having money. Like, It blows my mind. And I know he doesn't watch this, but like, these ex, he asked for $20 the other day. And I was just like, well, you have a job. Like, what do you do with your money? You know what I mean? I'm like...
Yeah.
Why are you? She doesn't even have a job, like, and has more money than you somehow, like, and it's just cycle of a sales guy, and I'm just like,
yeah,
what are you doing? And I've watched people habitually create that same cycle. Then they go out and say, you owe me the $20, or can I borrow this, or can and I look for people. They're like looking for people to bail them out, and the first person they go to is my business owner makes tons of money. Therefore, he owes me that money. And I'm like, no, you just need to be smart with your money. Like, stop being so dependent on his money. And guys, I'm telling you, I imploded a company. I sold way too much, and I didn't understand the finance side and how we were asking for all of our money in our paychecks, and I wasn't getting it. So I've been there, like, and none of us got paid, and I went 2 months without seeing a paycheck. And I'm like, we've sold all these jobs, but I realized because we were selling so much, they had no money. They had to buy material. They had to do this. They had to pay sales commissions, and then they stopped paying sales commissions because like we're trying to get these jobs installed, and we gotta afford to pay the crews and the supplies and the this, and we don't get our paycheck until after it's turned on from the banks, and we were like, oh, that makes sense. So we just
And you know who complains more than anyone about not getting paid is salesmen, but they should actually be the last ones to get paid, because if you think about it, if they don't pay the installers, if they don't buy the materials, the job doesn't exist. It can't happen. And if the job doesn't exist, then I don't care how good of a salesman you are, you shouldn't get paid.
Yeah, the job never got installed.
Exactly. But salesmen, they complain. They throw up a huge fuss. And so quite often the salesmen get paid first, which then puts a strain on the rest of the operation. And I think that you made a good point there. As a salesman, you go, well, my dealer, he's just so rich. He's making so much money. You guys would be very surprised to know how tight a lot of these dealers actually are, and it's because they're trying to pay you as much as they can, as fast as they can.
So have some grace with the owner and start being a lot more responsible with your money. That's all I gotta say. Like, it's actually pathetic, and I was there. I mean, I literally went to him complaining, and not in the sense of like whining. I was like, what do we need to do to help? And finally he was vulnerable, and the owner was like, we don't have any money. And I was like, what the fuck? Like, why don't you just say that like 2 months ago when I was trying to get a freaking paycheck because my guys are leaving me? And I was like, okay, what are we going to do? And he's like, and then I get fired. His solution was like, you're too expensive. We can't keep growing. We can't keep having you sell. We got to just go play catch up on everything you did sell. And I was like, well, that's a dumb solution, but it makes sense as a business owner. He's like, if we keep Sam,
you'll always be behind.
We'll always be behind. We'll never be able to catch up.
Kudos to you for crushing it.
Yeah. I imploded the company. Like, he's like, the only solution is we have to get rid of all the volume. He's like, we have to stop.
That's exactly what I was talking about. You can grow too fast.
Yeah, we grew them way too fast. We 20 times their company within like a month. Anyway, but get that. Like, think about that. I want you to fathom that. And I would have never, as a sales rep, known that breaks somebody.
Yeah.
But as an entrepreneur, he'd been doing it for years. Like, he got it. And he's like, Sam, I gotta let you go. And I was like, why are you gonna fire the best dude you ever had? Like, you idiot. Now I get it, and I forgive him, and I'm like, oh, that makes sense. Anyway, so hopefully you got, guys, value out of value this. And I love these podcasts, so they're very different. It's like, hey, let's go be the best sales rep. Let's go be the best owner. We talk about it all the time. But like this kind of stuff, yeah, you can sell all day, and if you have no money, then what's the point? Like, you run a business all day, and in 10 years, I remember listening to this guy. He talked about just like net worth versus business growth. And he's like, you could run a business all day, and all of a sudden the economy changes, like Netflix took over Redbox, it took over Blockbuster, something shifts, NEM 3.0, boom, California's going to have some real wake-up calls. And if you were just like, reinvest, make this, we're one day going to sell, and all of a sudden 3.0 rocked your business. And I think it's going to rock people bigger than they think they are. Like, I'm telling you right now. All of a sudden you're like, fuck, I wish I would have actually taken my money, saved it, invested it into real estate or invested it into other things, because the solar gold rush of California is going to have a different landscape here in the next couple of months. And if you have nothing to show for it, you're like, congratulations, you are now still poor, but you happen to have made a lot of money, ran a really dope big business, and now your wave just crashed.
There's a really good book called Profit First.
Yes.
If you haven't read it.
Oh, that's where I'm literally pulling this from.
Yeah.
He talks about the bakery.
Yep.
He goes, 10 years down the road, she's like, I have nothing to show for it.
Yes.
And she just kept, I'm literally pulling this story from the book, Profit First. And so I'm telling you this because I had that wake-up call. And, I always get so nervous taking a distribution as a business owner. You almost feel guilty, especially when other people see it. I'm like, Mike, I just took $400,000. He's like, what's that? He's like, what is this? And I felt bad saying it. I did. I was like, but I'm like, wait a minute. The point of this business is to make money. And guess what? He's like, good for you. Celebrates. High fives. Other people that see it, my bookkeeper, my, the Divvy person, anybody access to the books, they're just like, I felt guilty. And I think as a business owner, it's it's okay to feel good about winning and making money and putting it somewhere that, you know, I want to invest in oil and real estate and, you know, other things, because I'm like, who knows, when the storm blows. And I've had that principle always, and don't feel guilty for making money, putting it somewhere, and building that worth. Like, I think too many people have a weird relationship around money that they feel guilty for that. But my people know I take care of them. I do what I say I'm going to do. I pay the people I'm going to pay. Like, I'm running a business. And have that mentality. And it took me a while for me to wrap my head around that. Like, it really did. And so, just saying that honestly. But thank you guys. I hope you got some value out of this. Go watch the next episode. Share this podcast. Telling more people need to know more about money than I think we're talking about. And we'll see you guys on the next episode.